Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the 3 blind mice chart pattern. This is a unique formation that provides a valuable insight into potential market reversals. Now, by the end of this video, you would understand how to identify this trend, how to incorporate it into your trading strategy, and how to use it in your day-to-day trading activity. So stay tuned to learn how the 3 blind mice pattern could enhance your forex analysis skills. First of all, we start by understanding what this pattern is all about. And the 3 mice chart pattern is a fascinating formation that traders use to gauge potential reversals. It consists of 3 consecutive candlesticks moving in the same direction, either the bullish direction or the bearish direction, and is often seen as an indicator of a shift in market sentiment. Each candlestick plays a distinct role in signaling the exhaustion of the current trend, the emergence of a new trend, and its confirmation. The first candlestick represents the end of the prevailing trend in a bearish trend. This is typically red, showing strong selling pressure. Conservatively, in a bullish pattern, it will be a green candle you see first, signaling buying pressure. This initial move sets the stage for what is to come next. Now, the second candlestick is crucial as it provides confirmation of the trend reversal. When you see the second candlestick still a red candle in a bearish trend, it provides confirmation for either a trend reversal or a continuation trade. It reflects gaining momentum in the new direction and often has a low to no shadow. It often has a low to no shadow, indicating decisive market control by neither buyers nor sellers. The third candle solidifies the new trend direction with a long body and aligns with the movement of the previous 2 candles, confirming the pattern is well established. In a bearish scenario, the candle closed lower than the open, while in a bullish setup, it closed higher than its open. This pattern it appears after an uptrend or a downtrend and signals a shift in control between buyers and sellers. For bearish formation, it signals the arrival of new bears taking over the market. For bullish ones, it indicates bulls regaining control. When analyzing this pattern on your chart, you have to pay attention to its clean formation without significant shadows. This clarity reflects strong market sentiment behind each move. Now let's go to the real chart to see if we can spot some of these patterns, and we'll see how we can trade using the 3 mice pattern. The first indication is to spot the pattern on your chart, and as we can see at this area, we have spotted our black 3 blind mice pattern at this area in price. We can spot it at this area. We can see 1, 2, 3. This is a 3 blind pattern, a bullish pattern. Identifying the 3 blind pattern on your chart. This pattern consists of 3 consecutive candlesticks moving in the same direction, so typically signaling a trend reversal or continuation. For this strategy, you focus on a bullish setup or a bearish setup. Now, for a bearish setup, let's spot the pattern, and we can see this is a typical pattern. This is a typical pattern, as you can see it in this area. This is a typical pattern, 3 blind pattern. Now, this start off, once you indicate this in a bearish setup, the pattern appears after an uptrend or indicates the start of a downtrend, a continuation of a downtrend. The goal is to time your entries after confirming the pattern and align it with the broader market signal. You begin by spotting the three candles, the candlesticks with you spot the three candlestick with a long body and little to no shadow. As you can see, these are long bodies with little to no lower shadows or little to no shadows. Now, the first candle shows the exhaustion parallel to the uptrend. This is the exhaustion parallel to the uptrend. The second candle shows the confirmed shift in momentum. Now, this is a confirmed shift in momentum. The second candle shows a confirmed shift in momentum. So you can see at this area, why the third candle solidifies the bearish trend and closes lower than its opening. And this third candle, you can see at this area, it closed lower than its opening and it signifies or solidifies the downtrend. We can also use this first one as the first candle, second candle, and this the third candle, depending on how you see it. Once you have identified the pattern, you confirm it using additional indicators like your volume indicator. We can make use of our volume indicator at this point. The moment we spot an increase in the volume, this strengthens the bias, and as you can see at this area, the volume, there was an increase at that area in the volume. This solidifies our move. As you can see, it solidifies our move, and it signals that the third candlestick signals a strong market sentiment backing the reversal. This help reduces false signals and ensures that the trend is gaining traction. The next, you analyze the broader trend or context to ensure that this reversal aligns with other market factors. We look for resistance near the formation or of the three blind mice pattern, and as you can see, this pattern formed at a previous support that now turned to a resistance area. This is basically what it shows. At this area, this is where the pattern formed at a resistance area, further solidifying our setup. Now, why we look for it at an area of contest is because it helps reduce phase signals and ensures that the trend is gaining traction. It ensures that the trend is also backing our move, and as we can see, we are in a solid downtrend. So our confidence matches this our trade signal. Now we look for, if price action struggles to break this level, it further validates the bearish setup. As you can see, price action struggled at this point, trying to break this area. This further strengthens our setup. Now finally, for a confirmation candle after the third candlestick, this additional bearish candle reinforces the sellers and confirm control in the buyers. So the next candle, the next bearish candle further confirms our setup and shows that bears are really taking control in the market. So this is basically what we need to do. We need to always confirm before deciding to enter the trade. So our fourth candle or our fifth candle need to show bearish strength, showing that the bears are still in the market. To avoid entering trades prematurely, patience is key to ensure that your trading setup is valid. So after this, the best thing will be to enter your trade when you have confirmed without reasonable doubts that all your setup or all your confluences are being matched. So taking the trade at this area further confirms your setup, further confirms the setup, and you aim for your take profits of 1:2, 1:3, as the case may be. Now I can spot another three blind mine pattern at this area, and this is further confirmed by this strong support region when the market was trending from the downside and is about reversing. We can see some rejections here. Price broke up, came here to reject again, came down, came back up, came to retest before it formed our three mine pattern. As we can see, the first candle, second candle, the third candle. At this area, it further solidified our entry. On the fourth candle, we can enter on the fourth candle, or if you can count from here as your first candle, second candle, third candle, this can be your fourth candle. This will be where you don't enter your trade. You place your stop loss in a very reasonable area to avoid the market, a place where you put, where there will be enough room in case the market decides to reverse against you, you will still be in profit. And you aim for a 1:2 or 1:3 risk to reward ratio. You just come in and out of the trade. This is basically what this trading setup is all about. Always enter after you have seen your confirmation candle, because this avoids you from entering trades prematurely. Patience is key. You have to ensure that you are trading a valid setup. This is another example. The first candle, the second candle, the third candle, then the fourth candle that confirms our move. This is where you would want to enter. Place your stop loss just below the resistance area. Then you aim for your 1:2 or 1:3, as the case may be. This is all about the three blind mice chart pattern. Very easy to spot and very easy to trade. As long as you are following the steps carefully, you will use this pattern to anticipate market reversals and continuation patterns with greater accuracy. Ensure you combine it with a thorough analysis to make informed decision based on what you see on your chart. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.